What's up, everybody? Good morning. Smash that like button. Let's get ready to go. What's up, Matty B? How about the community traders trying to do this? Went way more net short last week. Insane. That's end of the year mechanics after recession. Yeah, this is going to be something we're going to have to see battling going into the first of the year. I think it's going to be a wave or two before it goes down, but it's not looking good. Say wave or two, meaning that we might see a week up, a week down, but it's going to be quick. The market's going to decide very soon. I thought lastly in the quarter, but you're going to see going into earnings, there's going to be a lot of changes to people's positions, and that's already indicated by committed traders. It's great you notice that. Okay, let's get started. Let's look at the bottom of the market. Market is opening. We are already passing up the doomsday band on. Let's go ahead. Oh, countdown's not over. Oh wait, it's okay. Let's go ahead and let's do this. How you guys doing? Good morning. Whew. Love y'all. Okay. Let's take a look really quick. You know what I'm going to do? I'm going to make myself slightly smaller. That way I don't cover up much of the screen here. Okay. So right out the door, rational. Let's double check NQ's back in the band. We're good. VIX is nice and stable, so that's two setups for being rational. Let's get a brand new... okay, right up here. Let's look at today's economic calendar. Let's just see what we have. I wonder why it never saves my filters. Do this every morning. Make sure that we can see what's going on in the news today. Nothing really big. The jobless claims is something that we do look at as indication of inflation. So let's take a look really quick at this guy before we find some plays. What you want to see is the jobless claims going up. When the jobless claims are going up, Powell will be less aggressive on rate hikes. This is the thesis that I posted on Twitter as well as StockTwits many months ago about the cycling of the market. So as long as this is looking bad, Powell's going to come in at a quarter of a point, maybe even 0 points at the next meeting. I can almost bet 50 or less. They're not going to start raising rates while unemployment's going up, or else they're going to cause a bigger problem. So keep an eyeball on that. Those numbers today. That's a really good number. Oh, am I muted? Can you hear me? Check. Oh, shit. Hold on. All right. Check. All right, that's better. Loud and clear. Okay. Yeah, for some reason... Okay, weird. Yeah, for some reason it was like crazy. All right. Must have been talking to myself. Did y'all hear anything I said so far? I hate when it happens. Reboot my computer after reinitialize. Okay, cool. Okay, we good? Love you guys. Okay. So as this is going up, that's a good sign for the meetings to come through a little lighter than huge rate hikes. Doesn't mean we're going to turn around, but let's just kind of make sure that... I've already signed up for financial juice. Okay, whatever. Let's get the rock scooter. Let's load up front center. Let's see, baby. Our data providers don't break my heart today. All right, good. Liquidity maps are in. That's great. Why am I looking a little pink? I think I need to change the white balance on my camera. No issues. Okay, good. Liquidity maps front and center. All right, let's go. All right, let's look VIX really quick. UVXY. Let's double check. These are 5 irrationality signals. The first 2 inside the bands. Check. No problems. VIX futures. Check. UVXY. No call wall. Check. That's great. So things are good. Nice and rational. Market's looking good. No hedge pressure break on SPY. No news event as we just looked. That's 4. And of course, number 5. No hedge pressure breaks. Watch out for QQQ today. This is the one I want you guys to pay attention to. This is the one out the door. Is going to likely be the mover. Right about, let's take a look at this. It's a 1-minute chart. Okay. So right about here, this is the doomsday band. So this is an irrational break. So markets are rational to the upside on the doomsday band. The upside limit, this is called an illiquidity pocket. This is going from here to here, here to here, here to here. Right now, we're moving up. Anything through here that continues to go has a monthly hedge pressure 265. Don't expect it to break. Long scalps go to here and you break at 265 is irrational, again, on top of irrational to an illiquidity pocket. So we're outside the DD bands. This is great. DD is 0.6, which is good. Touching the upper band is what you expect to happen, and it's already been achieved on Qs. So update today, but limited upside as the QQQ likely presses into here. Illiquidity pockets jolt from here to here, here to here. Liquidity pockets the other way around. You guys want to write down the difference? Liquidity is between a bear and a bull zone when the bull zone is on top. Bulls are upside down, bears are upside down in the middle. Just think of like when you're looking at which of these two gaps that you see between these are liquidity and illiquidity. Help you remember before we label them at some point. Imagine you're in the position of the bull and the position of the bear and just look at the middle. Oh gosh, Peloton commercial in my music. Can't you just input the music at the end of the song? Okay, so imagine the middle of this gap. If you're in the middle, bulls are upside down, bears are upside down. Both people are losing liquidity, losing liquidity, losing liquidity. L and L. Alliteration, remember that. If you're losing, it's liquidity. If they're both winning, it's going to run illiquidity. So if both sides are losing, it's illiquid. It's liquid. Both sides are winning, it's liquid. So here in the middle, bears are winning and bulls are winning, right? So illiquidity pockets do not like to stay in the middle. They like to run one side or the other. Okay, good deal. All right, hit that like button, you guys, while you're here. Thank you for joining. If you guys have not tried Rocket Scooter platform, first and foremost, get that free trial for your first time here. See what the hype is all about. Love you guys. Okay, let's go ahead and pull SPY up because QQQ is going to run right now and SPY is likely going to run as well. There's a lot of kind of choppiness along the way as people are closing out into your positions. You'll have to close out some shorts by the end of the year. A lot of mechanics going on. S&P, same thing, limited upside, 382 today off of this go. Resilience nice and positive, so this is going to hold and be steady. Remember, we're going to look at the gap up from yesterday and today. Here to there is a big redistribution zone. You can go ahead and mark it. Let's do a horizontal ray. And let's get the scanner going. I'm just going to kind of draw it there. Come back and modify that. Okay. So this is the first thing we do. At 16 o'clock right here. Okay. So I'm marking the redistribution zone on my chart. And what are you guys all doing for New Year's? Anybody got any cool plans? I will be going to San Diego on Saturday. Most likely. I have tickets. But they're with Southwest. If you guys are paying attention to what's going on, I have to make an executive decision. Do I want to get caught up in that shit show or not with Southwest? We haven't been canceled yet, but we're like, do we want to stand around in the airport with all the crazy stuff going on? So I don't know. If not, we'll be in San Diego. If you guys are in that area of the world, look us up. We'll come hang out with you guys. Originally, we were going to go see Zed at the Omni or whatever it's called now. It's a new name for the club. For New Year's and have a big New Year's party there. But we decided to have a house party instead with family. So we're going to be doing a chill event. New Year's going to be fun. Okay, the redistribution zone is here. We are outside of the redistribution zone. So as long as resilience is positive, then the rule is this is support. Outside of the zone. So now we're illiquid up to here. So this is a nice little run to there. Really good. What I'm going to do is on the scanner, let's pop out a version of the scanner. That is popping out a whole version of the platform. Let's not do that. Let me double check that this is... Can't even let them know there's a bug on that. Let's just use the scanner straight up. Okay, so let's look for hedge pusher breakouts on stocks. Let's go ahead and clear this out. Clear this out. We're going to do hedge pusher break up, monthly hedge pusher break up. We're going to sort by ones that are around the edge of both. XLF, so these are the financials today. So the XLF are on the breakout side of things. So we're going to pay very close attention to some of the financial plays today. Let's look at like Goldman Sachs, JP Morgan. These are the ones that I like. Goldman Sachs, this is a nice setup. Illiquidity pocket from here to here. Right? On that hedge pressure break. Today, on these run-ups, I personally wouldn't be taking a directional long, but that long scalp is looking really hot for a lot of these. JP Morgan here with no resistance. Let's go to the walls and see where that upside is. We'll go to the monthly, and then we'll look for put walls along the side. So that's not JP Morgan. So the XLF is on a hedge pressure break, so we're looking for financials today. This is the run. What is that? 136. Okay. No resistance on the monthlies. That's actually pretty interesting. So I'd run a monthly map on the financials. That looks like to be the strong sector going into the end of the year. Keep an eyeball on that team. this could be a nice little run into the year. Financials are hot today. Southwest, in the holidays, what happened was they had apparently like could not handle the amount of people booking and rebooking and canceling around the holidays, and it crashed their system, and there was like these massive systemic programming errors just in their system that somehow spread from airport to airport. Like when people were canceling and rebooking, so like it was going all the way to like planes not being able to take off. Like their whole system of the entire company was a bottleneck. Some employee of the company said this is the worst logistical disaster they've seen in the history of them working there in like 30 years. So whatever happened with Southwest was something along those lines. Like just enough people around Christmas and holidays are booking, rebooking. And no other airline, that never happened to anybody else, but just happened to them. So who knows? Our tickets are good, but like of the 20 people going to this party, everybody's flying in from around the world and country to go to this party. Half of them are canceled. So the question is, what are we going to do? We were just going to make like a little sightseeing tour for like a week or so. Their system is point to point instead of point to hub. Yeah, I know nothing about it, so if you know anything, feel free to teach us about it. Let's see what love is looking like today. This is Southwest ticker. If you guys aren't familiar, they don't love you. They don't love you today. That's for sure. Pretty good for a bear long down. So, you guys want to know how Rocket Scooter straight up works? Get the platform, free trial, no credit card required. Link in the bio. Check it out really quick. When you open the platform, you type in a ticker, it gives you a liquidity map. Liquidity map is going to tell you where the institutional positions are. That's the first letters, bull or bear. Then this is the hedging, long or short, with market makers. And then this is the bias of short-term weekly options hedging versus monthly options hedging. The difference between the two is the weekly options are usually used by market makers to rebalance the day-to-day imbalance. The monthly options are used to hedge long-term institutional positions. So if I'm a fund that bought 1 million shares, I'm going to protect it with monthly options for the most part. Not day traders are buying monthly options a month out. So this is your institutional hedging. This is your day-to-day market maker hedging from one day to the next. They're both market makers, but this is typically going to be purchased options to hedge those overnight holds, those imbalances, so buy and sell imbalances at the open and close. So the distance between these two is a sentiment change. The down sentiment really changes long-term versus short-term. So you'll see the example is at the top. It says bear long down. And this is like one example of that. So if you're going to read how this works, all you do is you take the letters, you go down to here, and you find the letters that correspond with the map. And it's literally a map. What the map is telling you on bear long down, and you have to kind of use the glossary to get used to this, everything on here has a part of the legend, right? 930 open is the black dot. So this says if we open here relative to the bear zone and hedge pressure, then it bounces on hedge pressure, and there likely is going to be high volume node buyers there to return. It's a V-shaped move. However, we didn't open below. We've actually broken above. So we actually started in a bear short down that has broken through. So now we're in this kind of long push move. There is no open above hedge pressure. So now we're just in this move right here where we're moving up to the next resistance, whatever that may be. So what you have to do now is in a bear long down, find what that next resistance is. And it looks like monthly hedge pressure is the next resistance. So if I were going to long something, now I wouldn't necessarily jump in on Southwest. So this is not a play for me. This is a fundamental disaster. But pretend that if it doesn't have a catalyst, the ebb and flow is from there to the next resistance. So what I do is I would say, okay, there's a long of a certain distance. That is like 1 1/4, and I could put like a 1 point stop. It's a 1 1/4 one trade. Pretty simple, just like that. Beneficial. The closest swap for QQ is around 100 points above current price. Is that correct? Yeah, that's correct. QQQ has no resistance except for monthly hedge pressure. And just like we said, there's the run for today. Isn't that crazy, right? Hedge pressure break, illiquidity pocket, it just zaps through. And this is one cool thing to note about these illiquidity pockets. The market does not want to stay there. It pushes really hard to the other side of the pocket, and it's not volume. Illiquidity is no traders, right? So whenever you hit one of these high volume nodes, God, I love how all of our calculations just popped up. Okay, guys, this is your evidence of all the stuff Rocket Scooter says we do. Wow, so quick. Okay, number one, high volume node every time at hedge pressure, predictable high volume. Monthly hedge pressure, high volume node, every time predictable high volume. We predict volume before it happens. Each level is guaranteed high volume. It's guaranteed. The only way it wouldn't happen is if people didn't hedge. Market makers stop hedging. This is the net sum of hedging of all those options. It is never wrong. Never wrong. That doesn't mean you can predict the pivot, predict where it goes. Nobody can predict direction, but we can predict volume. So if you're trading, the only levels that matter are this level and that level. Predictable, high volume. So if I'm longing from here to go to there. If I'm shorting against there to go somewhere else. So it doesn't matter what bias you have to formulate that on your own, just like any other trader. So it's like, having the world's best algorithm at your hands. It's not going to pick direction for you. So don't ever be fooled out there by people. They're going to hand you a stock market algorithm that's like picking direction. Click buttons, play this awesome game. Click a button, make money. We know the up, we know the down. We long today, short today, and it's just all over the place. And they don't have to make any decisions. It's all a fool's errand, and you will blow up your account. So be careful with anyone out there with anything that looks like something that's going to try to guess the market for you. Cannot guess the market. You still got to wake up and have a bias based on fundamentals and the real reasons market move. Are you long or are you short because of whatever actual reason? Companies are healthy, companies are not healthy. And CLH, I know, bro, let me tell you. It's not because I have to blame Dave for this. One day I was, okay, listen, I'm not going to tell. I'm going to give you guys a hint, okay? I don't care how successful or whatever you ever get in life. You should always, always, always use the following equation when you buy energy drinks. Equation is this. You take the price of the energy drink and the ratio of that to the number of milligrams of caffeine that you get, right? So it's $3 and you get 300 milligrams. It's great. It's a penny a milligram. Well, Rockstar, by far, to me, is the highest caffeine to cost ratio, but you have to have the little conditions that the energy drink doesn't taste like shit. So, like, you can go to the dollar store and get a maximum ratio of caffeine to money, but it's almost like it's almost like drinking like sugar gasoline with fruit flavor, like cough syrup. No go. So I would drink Rockstar because it was like, the best solution to that problem. It didn't taste like ass. You get 300 milligrams for like $1.50 a can, which is great. And then Dave sends me, he's like, stop drinking that poison. He's like, I'm gonna send you something that tastes better. I was like, what is it? He's like, it's called Celsius. I was like, whatever, they all taste the same. So I wake up, I go outside, I've got, the mod, DW. So I go outside and like doorstep, there's like a box of these Celsius drinks. And I'm like, all right, whatever. First drink I took, I was like, ooh. It was the variety pack. I was hooked. Celsius by far nails it when it comes to like flavors of energy drinks. Now, let me put an asterisk there. I shouldn't be drinking these things because I have high blood pressure. One of these days I'm going to have a stroke on the stream and kill over and die. So if that's the case, so hedge pressure doesn't die with me, someone call my mom and tell her to come get the computer. OG Green Monster. Yeah, dude, Daniel, I'm going to tell you, OG Green Monster is great. Now, I had a really bad experience with the OG Green Monster before because I don't know what it was, but I had like when I was younger, I drank too much and made me sick. And so ever since then, it's like that time, that one time that you drink too much tequila and you get sick and you never drink tequila again? Or that one time, like in my history, where you drink a dirty martini at the end of a night of drinking whiskey. You never had one before, and that salty ocean water is what I thought it tasted like. Is that what you get? And you get that kind of and I couldn't even use olive oil for a decade. I was so sensitive to it. So Monster, just smelling Monster makes me go, but it was like my favorite flavor for the longest time. Okay, so Boz, let's go back to your question, sorry. So QQQ, would I take a put here because of the resistance? No. Okay, wait, actually, hold on. Anytime the market goes irrational, okay, any hedge pressure break, the market is irrational. So what you do is you need to make a decision here. Monthly hedge pressure, will it resist or will it not resist? We have a resilience to guess if hedge pressure is going to break or not, and this has been positive the entire time. I'm not betting on resistance off of monthly. Now here's the thing, when you open below monthly, I'm more prone to short the market against it, yes. But note that some of the stocks are breaking through their monthly hedge pressures as well. So I want this to be negative. So we have a monthly resilience, which is forecasting tool where hedge pressure will or won't break. Now that is for SPY. QQQ has one. So let's go ahead and pull up NQ resistance as well, resilience. So we, let's put indicators. How you guys liking the new speed on the platform, right? The optimization is just gorgeous. I'll tell you guys the projects we just initiated going forward. But yeah, so resilience, right? The white number is a pivoting aggregate tool for half gap. The yellow one is a pivoting aggregate tool for hedge pressure, and it's a lot more simple to understand. It is the market cap inside that index that is above or breaking through hedge pressure versus the market cap that's resisting and breaking down. So NASDAQ has enough stock breaking through monthly hedge pressure that I wouldn't bet that the index resists it, okay? So it is still a bet, but just remember which one is higher priority. Opening below monthly hedge pressure typically has higher priority to short than betting that it breaks. So know that because of this, the likelihood of it breaking, remember it was only a 4% chance hedge pressures break. So it's appropriate to short against that, knowing that if it's breaking and you get those volume spikes and lose that volume and it's continuing to go, do not bag hold this, period. If that rare thing happens, get out of the way. So the priority is, which one would I do? Would I short against it when this says not to? The answer is the priority is to short against it. But knowing that if it does break and go against you more than a strike, again, not financial trading advice, but just teaching how I would trade it personally. So let me show you the rules here. And if you guys want to learn something super quick, where's my mouse? Come on, mouse. In the actual trading strats itself, the rules are numbered, and that is the priority. So MHP or hedge pressure breaks take high priority over anything else. So, but here's the thing. Today, we already broke through a hedge pressure. The market is already irrational, so it's going to behave a little erratically. This is pretty erratic, right? It may not break through this. It may resist this at all. I'm going to say I would bet that it's not going to break through that. But I'm not going to bet that it's going to reverse and break through hedge pressure to the downside. So for here, the trade today would be I'd long from here to here and then close down for the day. I don't want to do anything else. That was predictable, and to a degree, I guess. So monthly hedge pressure index, bull or bear structure, is 7th. So at the top of the list is the highest priority. Anything above outranks anything below. They're ranked by the historic volume they create. So like we looked at, years and years of catalyst data and looked at the amount of volume relative to the day the catalyst will bring. It's the highest ratio, right? So like we look at every hedge pressure break and would say that hedge pressure breaks on average would boost the volume 5 times, and then I'm just making up a number, and then because I'm gonna give you the real number, but that's all back end stuff. But say the BBB boosted volume 20 times, so everything here would be less volume historically than that. So they're ranked by the amount of participation they create. Does that make sense? So your answering is if you have to make a decision between competing signals. This is really high on the list. Anything in these two categories typically drastically change what you do. This is like, okay, I'm either going to long or short. Usual and unusual market right here is how big I bet. And all the instructions are going to be here. Irrational or rational is if I sit out on the market or not. So today, bull bear structure, monthly hedge pressure reveals the actual purest form of market sentiment above its bull structure and below its bear structure. So we are bear structure on Q. The market is structured until January the 20th, bearish right now on all hedging and positions. So we bumped up against the bear limit, and it's a holiday week, and it's going to be light volume with no catalyst. So all of that fundamentals to me tell me it's a great sign that the market likely just span this volatility, and I would long to there and close out. Would I short against it? It's possible, but you need something else, right, to give me some indication to short against it. So bear long down. Let's see what the liquidity map tells me. Well, there you go, right? So liquidity map right here has, okay, I can short, that's good. Half gap is positive. So if you're gonna like do it, you know, the way I used to do it when I first before I got all this stuff memorized, let me show you guys something. And remember, go to rocketscooter.com. You guys can have a free trial of this with no credit card. It's actually really, really fun to do this kind of analysis. So what you're gonna do is you're gonna go here, and you can just draw arrows on your book here. So this is pointing up. I'm sorry. This is pointing down. Half gap resilience is pointing up. So the first thing you'll notice is that we're above half gap. Redistribution. Oh, I'm sorry. I don't put on my glasses. I'm on the wrong line. This is pointing down. Redistribution zone. We're outside the redistribution zone. We're above it. Illiquidity pockets. Yellow line or red line on the index. None of those yet that I see. MHP resilience is positive. Regular resilience is positive. Inside the doomsday band, we are irrational, and we're outside of it. Everything's pointing up with the exception of liquidity map, which is pointing down. Catalyst, not today. Any effects on the VIX, not today. Bull bear structure, this is pointing down. Triple B on VIX, that's the thing that it's one of our calculations. It's manual right now. I forgot what it is, so let me go back and look at it. We are above the triple B on the VIX, which is 2272. Guys, I'll write this number down for you. So that's on VX futures. Write this number down. It will stay there until the third Tuesday of the month, and that number changes. It's a once a month calc. It's one of our 15 calcs. It exploits a very, 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 very prominent controlling thing in futures. That's why it's ranked so high at the top. Okay, back to the liquidity. So this is just giving you guys an example of how you can do this before you get used to it. Just, you can line it up and just, you know, maybe print out this piece of paper every morning, have it next to you, and get a pencil and just kind of like analyze each one of them one at a time. We're above triple B, so that actually is not so bullish either. Gamma squeezes, hedge pressure breaks. Yes, we broke to the upside. So notice how it's like up, 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 irrational for that break. Down, down, but irrational for that break. So we have irrational signals. And the highest one typically supersedes all of them. So hedge pressure break to the upside is likely to control the day more than anything else, which anchors that hedge pressure today as support. Very likely that no matter what happens, we're going to stay above hedge pressure. We had no VIX things today. We're outside the doomsday band to the upside. That's also rational. This doesn't apply. This doesn't apply. So you can see that today we had, you know, mostly upward signals with some downward pressure off of monthly hedge. That's it. A little bit of these things that are down, I will come here and read them. And it'll say, okay, VIX is above this level. It's true. Loose pivots and overshoots. You have unusual volatility. Okay. So I can assume that I'm going to have bounce arounds when I get to places. Bull bear structure. If we're below, it's bear structure. Okay, it's above, it's bull structure. So that's what that's telling me. So just to summarize, we'll have loose pivots. Right, I'm going to write down the ones that go against my long plan. Loose pivots, which means we'll overshoot, probably overshoot monthly hedge pressure. We are MHP bear structure, which means over the course of the month, it's still bearish. So my bull trade should be very short-lived because, well, institutions are actually structured bearish, or market makers are hedging bearish. So any bull trade, again, I'm going to call myself lucky for a little bit. And we have two irrational signals, right, on hedge pressure breaks and doomsday. So everything points to short-term upside burps, and that's it. And if you got that one today, because it's, you know, limited capacity, I would take the day trade and call it a day. And so I wouldn't be guessing from here. I actually close down and do nothing else. So that's, and I would say like every day, the first thing you do is check these 5 things. It takes 5 seconds, 10 seconds to do it. I actually have a video that says 10-second pre-market check. Check, 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 check. 2 things flagged. Okay, so day trader, when the market's irrational, don't try to day trade anymore. The market's 100% unpredictable when it's irrational. Unusual bets, if I'm on the long side, just knowing that these 2 things will cause loose pivots and overshoots, and then of course we have that unfortunate bear structure for the month. I wouldn't be betting the farm on the long side. I'd be taking a scalp, getting in, getting out. Unusual stuff, the market is behaving in a usual manner when bears stay bears and bulls stay bulls. And expected hedging or unusual means a sentiment change is brewing, okay? Determines if I bet big or bet small. So brewing means that the market is starting to play with the sentiment change, right? Most of the signals are up on the stock side. The index still has some slight negative hedging. And the structure is starting to pivot down to the downside. We're starting to see that loss of bull momentum and that sentiment change is brewing. And the cool thing about Rocket Suit is you can literally create a like 1-paragraph storybook just from these lines. And it's like, oh yeah, that is what we were seeing, right? We had a nice bull bounce since October and the sentiment is starting to change. The combination of this and this will literally give you an exact storybook of what you're seeing. And if you guys like that, click the like button in the stream because it's very, very accurate on what we're seeing. Resistance at monthly hedge. General upward momentum and irrational burps to the upside. Illiquidity pocket just rush through to hit the next resistance. And then we're going to bump into structure with some loose overshoots. Or loose pivots. Overshooting the level. And irrational, so the market's going to be unpredictable. Doesn't sound stable, doesn't sound bullish, doesn't sound bearish, and the unusual flags against all this bull type pivoting, again repeating, creates the idea that unusual means a sentiment change is brewing. People are starting to shift over, okay? So now it's like that's the end of the day. That's the end of the predictable day. So in the rocket scooter, right, bear long down. Here's your high volume pivot, here's your high volume pivot. Illiquidity pockets do not hold in the middle. They rush from one side to the other. That's characteristic of illiquidity pockets. We did a whole video on this one time. You hit monthly hedge, there's high volume. You hit monthly hedge, there's high volume. There's your loose pivots and overshoots. It's not going to be sturdy. It's not going to be right on the edge. It's, again, predictable that it'll even overshoot just from the storybook. Alpha Labs, the kitchen drink Celsius. Okay, what are y'all's favorite Celsius, by the way? That stuff makes you jittery and cracked out. Yeah, dude, this shit makes me jittery. My girlfriend makes me get her permission to drink a Celsius. She says I become an asshole sometimes when I'm over caffeinated. I'm like, but I thought that's what you liked about me. That I'm a take no prisoners asshole. He's like, yeah, but not to me. The asshole to everyone else. I'm like, okay. So I'm like, babe. Hey, can I drink a Celsius today? She's like, all right, I'll see you at 2 p.m. Just, Celsius the shit, drink them prior to your workouts. Yeah, we actually do the workout ones, the BCAA ones, and they're so great. It's the same thought process as an alcoholic. Thank you, Ben. I know. I'm a caffeine addict. You love the OG Green Monster. I read that. Okay. You can just get cheap caffeine pills and level up at any energy drink. As Mark comes in with the ultimate solution to saving money, I agree. You just spit coffee out from laughing. They said tastes like ass. Yeah, seriously. Dollar store energy drinks. While the concept is great. Okay. I chew with Fireball in all honesty. Dude, Daniel, I'm going to tell you. The one time I had Fireball, earmuffs, kids. Me and a bunch of strangers, I was in my 20s. Me and a bunch of strangers ended up in the pool of my apartment. Mostly nobody had clothes on. And we all got sick and someone threw up in the pool. I hated that stuff. Blech. It was after a music festival. Lightning fast these days, loving it. Okay, good. Yeah, the refresh on the platform are really, really, really quick. Okay, let's do the scanner if you guys want to see some scans. NQ-Res 100, which is as strong as it can be. Yeah, so if this, as you see, there is enough stock on the upside of monthly hedge, I just personally wouldn't short against it, even though there is a short against it. I only short against monthly hedge from the bottom though, so it is a great short op. You just basically want to make sure that you're not bag holding if you break. If you break monthly hedge pressure, the squeeze is just disgusting. If we break monthly hedge pressure today, we're going to there. So the trick is, yeah, every time, quote unquote, if you want to find shorts, this is where you short from every time. Against the monthly is the only time I ever short the index, ever. But knowing that I can't take my eyes off of it because it's likely to break. So, but also with that VIX being the way that it is, I'm expecting overshoots. So I can't get scared out of my position easily from the overshoots. I have to use my volume trick like I do every day. So what's neat is that, even reading the priorities of the rules, it tells you expect overshoots, right? That's exactly what it says. And you not just get scared like, oh shit, it's breaking. No, it's going to try to hold that structure. This is going to indicate that it's going to try to break. And that loose pivot, that unusual volatility is going to imply there's overshoots. So the best part about rocket scooter stuff, right, today it literally is a storybook on everything that you see. And the idea is, as a trader, you need to have some kind of power and indication of what you do. One thing that you never see, and I'll tell you guys this, right? We've been around for what, 6 years? Rocket Scooter's been in development for 3. Platform's been out for 1. In the history of the 6 years, you've really never seen anybody, ever, in the world of social media, say that this stuff is whack. People that have followed us or seen what we're building, they know it's a big deal. You would have a jillion critics if this thing sucked. You have people out there being like, I use it, it sucks, these guys suck, blow up my accounts. You'll see, there's no one single document of people saying that this stuff doesn't predict volume. So we're on to something big, and we're glad you guys are joining the On to Something Big. We've had over probably 2,000 people go through our free trial now, total, since we had our software out. And everybody that uses it is always giving us feedback. We're always rebuilding it. We're always making new stuff. The idea is that a trader now can put, you guys can go out there and buy some technical analysis trading algorithm. It'll blow up your account, and then all of a sudden you're going to blame the person that made it. This is teaching you how to trade. And so if you do bad or you do good, you have to make your own decisions. This isn't saying you need a long or short. Nobody's ever going to try to do that for you. But this is giving you a better read on the market without a bunch of crap. You see, I'm not having like 8 different charts. I don't got 9 bajillion colors on the screen. I don't got 1,000 indicators. I've literally got no indicators, with the exception of this one, and this is the one we made. So the idea is that, here's a storybook, right? Market open, and we had a little bit of a short squeeze, a little bit of volume, bump through illiquidity pocket, which I said that before it happened. And then you go to the quote-unquote next resistance from the liquidity map, which was here. It was bear long up, next resistance liquidity map. Each point of these hedge pressure and monthly hedge pressure will be guaranteed high volume, guaranteed high volume. The trick when trading against pivots, any pivot, I don't care what it is, this is how you know that your purchased machinery from some guru vendor is bunk. Is that when you get to quote unquote some reversal target or some kind of whatever, you need to see traders step up and be there. If there are no traders at those levels that your guru is selling you, then it's bunk, it's fake. So anytime you see like a signal or a pivot signal, you don't see volume, they don't know what they've made. And every time we have interaction with our pivots, there's volume. And at 9:30 in the morning, before the market starts, we're pulling data. And when the market starts, we're calculating these numbers so they stay there all day. Doesn't mean it's going to predict what the market's doing, but it gives you the story. And here's the story. Again, broke through hedge pressure. Market's irrational. It's going to be random. Hits an illiquidity pocket. It's going to zap to the other pocket. It's going to zap to the other side really quick with no resistance. Great. Predictable to a degree, yeah. But as a trader, you're not trying to predict. That's the wrong word to say. It's odds betting, right? The odds are very high it goes there. before it goes there. And those priorities kind of help you do it. So if you really want to kind of boil down what is rocket here, it's like counting cards for trading. You're doing like statistical probability without really doing the math. There's a higher probability of number 1 on the list controlling number 15 on the list. And so you just kind of step up and go through all of them and know that an irrational day was flagged right here and the market's going to be random. Okay, so I'm not going to day trade, period. If my once it flags irrational, if it's irrational to the bear side, I never day trade. If it's irrational to the bull side, I always jump in. Now, I'm not trading this week. It's going to be when I get back from San Diego. I'm going to start my live trading challenge. You guys can watch that live. So irrational markets are not going to have any resistance. I'm sorry, illiquidity pockets are not going to have much resistance because there's no traders in here. Bears and bulls are both winning the trade, so the market's going to move very rapidly. You hit that next resistance, and then if you have high volume, the way that you trade any pivot against volume is that when you're interacting with the pivot, you want to see high volume. Okay, step 1 is there is high volume, check. Number 2 is as that volume is in decline and returning back to like, okay, so if I were to draw a line that represents the average volume, right? This is the average activity of this day. So as it plays around and starts to trade back to the average volume, whatever side you're on at this point in time is the winning side. Not where the volume comes up. So we're not there yet. Almost there. So right now the question is, when you get to MHP, that triple B indicates loose pivots and overshoots. There's some overshoots. So is this an overshoot or a break? Well, it's trading high on low volume. That's a break. So you want to see something push through a level on low volume, not high volume. Does that make sense? The green tea one is by far the best. The peach mango green tea. I got addicted to that flavor, peach mango green tea, with the crystal lights. I used to put those in my water bottles. Alan says, huh? Okay, so here's what happens, right? When market hits a pivot, you're going to expect volume to come as the fight happens. This is bulls and bears. This is bulls and bears, all fighting. So you have a bunch of capitulation and hedging, and it's mostly, it's hedging, not longs or shorts. Okay. This is how you trade any pivot. It's not the volume. The volume comes in irrational markets or hedging. Two things. There are only two things that create volume in the middle of the day. If the market had no catalyst every single day, you would see a perfect volume distribution that looks like this, okay? With no spikes. I'm talking no spikes. You would see this, okay? Anytime you see spikes in the middle of the day, especially spikes that are higher volume than the open, something happened, and you can always find out what happened. Something irrational or unusual happened. One of the two. This is very irrational and unusual. Volume spikes in the middle of the day coming out of stuff. So volume spikes are going to be like one-offs or human behavior, and in the event of a catalyst, everyone's going to be behaving. So if you have no catalyst and no irrational market, volume spikes are normal as bulls and bears are balancing their hedging, right? So the net order flow is maximized at hedge pressure. This is the net order flow maximum of changing delta of all options sold to market makers that are weeklies. It's a long-winded answer. This is the maximum order flow, i.e. the maximum gamma or the maximum change in delta, which is the maximum order flow. These levels predict the highest order flow. You ever hear everybody right now is selling flow and unusual, this and that, a bot for your Discord, unusual options, unusual flow, all this stuff. Right here, your insert copycat, unusual program. There's a billion of them. Everybody is focusing on this particular thing. Unusual volume, ding, 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 unusual. Oh, we got some weird stuff in queues right now. Unusual activity, right? You guys have heard that. And Rocket Scooter at 9:30, you're like, oh yeah, we knew unusual activity would be at 265. Oh, that's cute. You're just now telling me it's there? Oh yeah, I was waiting for it all morning. So we actually predict unusual activity What those software things do, we tell you where it's going to be. As a matter of fact, I have some really good friends over at Black Box Stocks, a lot of really good friends, and they were like one of the first to do the unusual stuff. And one of the things with my friends over there, what we've actually discussed, is the harmony between their software and ours. They can pull unusual activity from like any random event, which is great. If unusual activity is pairing up with your hedge pressures, it's like double confluence, and it's a really good signal. So as we see, monthly hedge pressure resilience is positive. Like I said, I wouldn't bet against that, and I didn't. I say if I were to short, I only short against monthly hedge pressure, but I have to know that if I break, you're bag holding for the day and it's really violent. Okay. This is a very great tool to predict hedge pressure breaks, and that's what it was designed to do, and it looks like it did it. So the way that it works is that anytime you interact with a volume pivot, okay, at this particular level, you've got all the people sold options longing and shorting that thing based on the maximum shift in delta. So you're going to have all the robots doing maximum amount of things right here, which is volume. So the first minute you hit the thing, you're going to have longs and shorts at maximum order flow. And then once, anytime the market, pretend that you have your balance is delta 50 here. And just pretend delta is 60 there and 40 there. So as you go up and down, you're going to long 10 shares per contract and short 10 shares per contract up and down until your robot is designed to balance out. So in this area, you got a lot of just shifting. And so as that shifting takes place, you're just going to see like a decay in volume. You might see a couple more attempts as bigger positions tend to behave, but as that volume is returning back to the normal volume without these unusual single offs, whatever side you were on, when you break on lower volume, that's the winning side, not when you break on volume. Volume is like a one-off trader. When the volume is not there and price is moving this way, it's market makers raising their ask price because they can see that it's illiquid at that point. So you want to break through a pivot, the volume comes and declines, and then the low volume is the confirmation on the other side. Case in point, right? Here it is. Do I look for anything? At this moment in time, the market is irrational. If you're doing any day trades inside of here, good luck to you. I wouldn't touch the market. Irrational markets, it's random. And at mean reversion, it's double random. So here it's double random. This right here should flag you. The market's found its balance point for the day. There's a liquidity pocket. Done for, yeah. Mateen says you're out of your short when I was teaching about volume decay. You're happy you're on the stream. Oh, it's a good trick, right? I mean, it's really what you're looking for. You want to see price move fast when volume's coming down. That's exactly how you should trade if you're day trading. High volume is typically bulls and bears together. You see how there's not a lot of movements with the high volume, and the volume comes down. The market is pressing higher highs on low volume. That's a great sign. Market is having big candles on lower volume. That's a great sign. So where is this coming from, right? Here's more storybook. Shorts just got squeezed. Market's irrational. We're squeezing shorts into the new year. How about that, right? What is this volume? Well, it's all the robots delta hedging at the maximum order flow. Long and short. So, right? So this is certainly a good deal. This helps you see that the sum of the stocks in the S&P, and Nasdaq's was also positive, are breaking through or above hedge pressure, right? Monthly. So while this white line tie breaks half gap resilience, right, tells you a lot of stuff. Res greater than 0. Let's do the pussy levels. So with all the stuff you see on the screen, it's kind of neat, right? I love teaching this. Resilience greater than 0, out the door, this is resistance. We break above the open, now that is resistance or support. So at the open, that is support because of this. The open being support outside of the redistribution zone and this positive. Now, this is the support for the day, the opening price. Illiquidity pocket. The minute you burp into illiquidity pocket, just tell yourself it's going to run to the put wall. Every time, that's a really high probable move. So now it goes to here and pushes up. The bear long down told me I would look for the next resistance. It was there. You get there, it's bouncing around. Triple B VIX tells me, okay, loose pivots and overshoots. Are these overshoots? Maybe. Let's go to the volume. Here's high volume, and then here's volumes decaying. An attempted volume spike, nothing came out of it. Market consolidated above monthly hedge pressure. This is positive, so that is support now. And as the volume's decaying, now shorts are getting squeezed, which is here. Play by play. And you can do this yourself too when you learn how to do this. And then, you know, no longer are you kind of constrained to having like 8 different charts on your screen. I hate when people do this. It's like, okay, what does the 5-minute chart say? What does the 15-minute chart say? It was the hour-long chart say? It was the daily chart say? You have all these different charts. And they call it confluence. Multi-timeframe, I think, is the word that most of the TA people use. Which is to say if all your signals line up on multiple time frames. That's just a very sophisticated way of giving you confirmation bias. It's not really predictable because those indicators will tell you what's already happened. And the further you zoom out, the further the delay is and the further the bias is shifted into what's already happened in the past. Like a daily chart is looking further into the past where it's less impactful today, but more impactful on the indicator. It's the silliest thing ever. I never change my time frames. The levels are the levels, which I love. And hopefully when you guys are learning to trade, you're not like, okay, well, it looks bearish on the 1 minute. Let me look at the 15-minute. Oh, thank God. Okay, now that's, okay. Now it looks bullish. That's what I want to see. So let me keep it on here and let me adjust how my trade time frame is going to work. It's just a way that the technical indicator folks invented to overcome the shortcomings of that type of analysis. It doesn't work, so what they do is try to confuse you further by having you look at it on multiple time frames. So that you can find, like, okay, the signal doesn't work, but you're cycling through a bunch of time frames. Oh, it does work on the hourly chart. Phew, my guru was right, it does work. I can't believe anybody never understood that. And when I started looking into technical analysis, when people said, look at it in multiple time frames, being a mathematician myself was just like the stupidest thing ever. Like, okay, well, look at 1 minute, 10-minute, hourly, daily, weekly, put them all together. It's like the higher you zoom out, the worse the problem gets. I don't understand. If it's not present on the smallest time frame, then it's not really a signal. It's just showing you history with delay because an average is a delay. So it showed me people did a month ago, and it's delaying a signal now. There's nothing related to what people are doing now. So it sent us on a journey over the years to build something that doesn't try to forecast price pivots based on historic price. Right. So that's why we dove into the options world in hedging. We understood that the mechanical side of the market doesn't ever change. It's consistent. So that was a little bit more consistent for my behavior. Not consistent in predicting the market. No one can predict the stock market. I made a post on YouTube yesterday, and I made a challenge to all technical analysis traders, all futures traders, all live streamers on YouTube, everyone. I said, post me a 3 to 5 year broker statement showing me that your technical analysis system works. And I bet you that post will stay on my YouTube channel for 10 years and there will never be a response to it. To prove a point. So don't go watch YouTubers out there trying to sell you stuff until they give you that proof that it works. And I promise it doesn't work. If it works, I'd buy it and use it myself. I would have to wake up in the morning, just automate it. That'd be lovely. If I had somebody with market prediction algorithm, I'd quit my job. I would have to wake up and do this every day. Deal with you knuckleheads. Daddy would just push play and stay in bed and watch season 3 of Jack Ryan all day long. I didn't have to think about the market. I mean, I don't love you, Alex. Don't count your blessings. Or count your blessings. Just kidding. You know how much I love you, bro. Wait, are you Goose, Alex? Which Alex are you? Are you Silly Goose? If you are... Okay, never mind. That's another Alex. He has 2 L's in his name. Jack Ryan's worth the watch. Season 3, that's pretty fucking good. Yeah, I waited a while for that to come out. We have another Alex L who's also a member as well. But I always said, like, nobody will ever respond to that post and, like, here's a link to my 3-year broker statement with my automated trading system. Never. Nobody, not one person. It's a challenge. You can clip what I'm saying right now. Not one person in 5 years will show a 3 to 5 year statement in the history of this YouTube channel. 50 years from now, there will be no responses to that post. Trust me when I say that. The new wave of analysis can use modern data, options data. If you can predict where traders will be, that's all that matters. It doesn't mean you're going to predict how they'll behave. You can't. So technical analysis will always fail. You cannot predict how people will behave right now. The moving averages say people should buy, but if someone has a margin call, they're going to sell. It's stupid. It's selling you stupidity. It really is. And all you're ever going to do is be chasing your tail. Counting cards is, well, there's a probability that this is going to have volume high. There's volume going to be there. So if I'm behaving in my trading, this is where I'm behaving and that's where I'm behaving. Long or short, that's up to you guys. Y'all are competing with each other as to what happens here and what happens here. Your guess is as good as mine. Statistically, we try to show with the liquidity map historically what happens more often than the other, but it doesn't predict. Nothing is 100% and the market can be random. Do we all understand? I want everybody to type yes in chat if you understand that. If you're learning from me, there is no such thing on planet Earth as a predictable technical analysis algorithm. It is a scam, 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 scam. 100%. Nobody on YouTube and nobody on planet fucking Earth will ever respond to that post with a 3 to 5 year broker statement of continuous trading history with their bullshit, garbage, Crayola explosion algorithm in the history of this fucking channel. I promise you that. You cannot escape learning how to trade and you must manually make decisions. An algorithm might be able to understand irrationality and behave specifically when something happens, but you need to write sophisticated machine learning that is studying human behavior and have more inputs than just price and volume. You need to have positional data, you need to have assessments of the risk and exposure of market makers and hedge funds and firms. I'm talking heavy quantitative data. Heavy quantitative data to make any kind of forecast of what humans are going to do. What is the health of all the companies in this index? What is the health of that company? What are the stats of what I expect that company to do relative to the expectations? I'm going to look at all the different publications, analysts, experts' view of that company at earnings. How do I imagine those earnings to change based on, oh, there's a news event, you know, a boat shipping iPhones from wherever they're manufactured just crashed in the ocean. My algorithm calculated how much Apple's going to lose according to expectations and priced that in an Apple and made those trades. Imagine Wall Street doing that. Oh wait, they do. So nobody's magic marker robots have that sophistication to compete against those firms and funds. It's just silly. So be careful thinking that you can escape making trades by understanding markets can be predicted. What else can you can't? Never. Okay, check Natcast. Okay, You gas? Is it you gas and degas? Do we have those? What's the ETF for the leverage ETFs for natural gas? UNG. Okay. Okay. So the best thing you have to do when you're trading is you have to understand that weird irrational things happen and you can't predict, you must react. Every time you must react to what you see. You must react. So you have to understand that if something happens that indicates random human behavior. You have to react. You couldn't have predicted that some firm is getting squeezed. You just can't. It's impossible. The 3X are taken off the market. Oh, really? I didn't know that. Okay. Bear short down is the most bearish signal set you have. It looks like, let me find where those walls are. So natural gas is just in a natural decay right now against 15. So the general pressure is 15 and lower. And there's really no trade on it right here that I see personally. I would say that against 15 there is resistance, and that's all I can tell from this chart. Yeah, and so let's look at SPY really quick, as Mark is saying. SPY has found a liquidity pocket right here. This is likely the end of the trade. Now, one thing is that you don't normally go from one liquidity pocket to two. So if you hit the second liquidity pocket, that's typically like an exhaustion run. So the chances of it going to here and here is going to be a lot lower. Again, would not try to short this, but we had an irrational break force us out of this first liquidity pocket, which is here, and into the second one. This is likely the high of the day. Congratulations if you long the market today. If you're shorting the market, good luck. Okay. I'm gonna take a quick break. I'll be right back. I'm not sure what screen this is going to show. Be right back. Make sure you guys go really quick. I'm going to post a link in chat if you want a free trial of the Rocket Scooter stuff, and we'll do some training today. Now the app is up in the afternoon. We will do a Zoom session. We always do Zoom sessions after the live stream. The Zoom sessions where we really go deep into teaching one specific thing. So get the free trial. It's only for members only. Click this. Check it out. Love to see you guys. Come over and we'll be right back. All right, we're back. Sorry for the delay. All right, you guys. Gonna head over to the Discord really quick if you're still here. I should have ended the stream, but usually we only stream for about an hour and a half. Then we go over to Discord. Go here really quick, and we'll have a Zoom meeting in about maybe 30 minutes. Go here really quick. We'll call it a day. Thank you guys for tuning in. Sorry for being gone so long. Love you guys. We'll see you on in a little bit. Just remember, Rocket Scooter is here. Launched. Liquidity maps, market maker positions, hedging. We got it all. Continually making new stuff to make your trading experience more informed, more educated. Put some power on your scooter. Take your analysis into orbit. Remember, markets are rational, irrational, trade with control. We hope to bring these tools to your trading diet. Free trial, 7 days, no credit card. Check it out. Nothing to lose. And then head over to our Discord. It's free. The chat room is free. You can hang out, learn. Subscribe for a month if you want. There's tons of tools, tons of equations, tons of calculations, new indicators, new ways to see the market. We're glad to bring it to you. I'm going to see you guys all in about half an hour. Have a good one.